my name is Eddie Tofpik. I'm Head of Technical Analysis and Senior Markets Analyst at ADM Investor Services International Limited. Here is your daily technical analysis of LME 3-month copper and aluminium. I'll start with LME 3-month copper. A bullish thrusting pattern yesterday, yet I am willing also to look upon it as an indecisive spinning top as well. It was that kind of day. The market is once again capped by what was support and is now resistance. The rising medium moving average currently at 92.83, and to a certain degree by the recent 50% Fibonacci line at 92.26, but I am not that sure on this last one. Support below has come from the congestion that made up that March to April sideways triangle between approximately the 91.60 level down to about 88.67, and then again between 87.66 and 86.65. It seems for the moment that this market is possibly trying to form a base where we are, but I'd like to see a few more days action to confirm that. Overall, one can say this was a follow-on lower from the recent descending triangle pattern. Speaking of the descending triangle, I said this last week, but please be aware a pullback up to the 96.50 area may still happen now, and if it did, it would still retain the bearish incentive this market. This is not a target, but more an upper limit, if you like. However, time is running out for such an action, and it's running out fast. So far today, a higher open and a gentle dip down towards the congestion from the sideways triangle, but then an aversion from the move lower, and we're currently sitting just under, or just around, just under the 50% Fibonacci line right now. LME 3-month aluminium. An unusual key reversal up yesterday, as it was made on the previous session's bullish white soldier, thus also making it a second bullish white soldier, which, as you can see, is an unusual position for it to be in. The base of the action was once again on the combination of the June 2018 high at 23.53 and the lower bull channel line of the broken March to date based bull channel, currently 23.59 to 24.60. Cap on the market, somewhat unsurprisingly, was the rising short medium moving average, currently at 24.09. All this action also puts in doubt target X below in the 23.33 area. That's the target for the recent sideways triangle. The only thing that could help this is if we regard the last few days' action as a type of bear flag, but it's a little too early at that as an idea even just now. One thing seems certain: the support underneath in the June high area and stretching down to the big old 50% Fibonacci line of the 2008-2009 move at 23.30 is not to be underestimated. So far today, a slightly higher open and another attempt to push up over the short medium moving average, which has again seemingly failed to push up over the short medium moving average. These failures to push up over this moving average, despite each day making higher highs, are disconcerting. Beginning to wonder what the market will do once we stop making higher highs. There's also the opportunity to look at the last few days' action as a horn bottom. More on that later. Thank you for listening. This short version broadcast gives the essential market patterns and consequences. Please be aware of the risk disclaimer posted with this broadcast. Copyright is Eddie Tofpik and ADM Investor Services International Limited. And here comes the final bit.